Hey folks, it's Vic Noble here with your weekly trade example for the week ending September the 20th, 2013. Today I'm going to show you why we trade the way we do, why we teach what we do using these patterns, and basically it's because it works. Now don't get me wrong, that doesn't mean that it's a robot that you can just step it up and make money instantly. That's just not the way it really is. In most cases it does take some time and study in order to to gain a proper understanding of the setup, and just as importantly, to gain the confidence to trade them. Because without confidence, nothing good is going to happen. Now today, which is September 20th, 2013, this is a great example of how one trade can lead to another just using these patterns. But most importantly, I want to show you how to take advantage of these moves by having an understanding of price action, technicals, and fundamentals. This is the Aussie US dollar pair. This pair has a daily trend bias to the upside at this point. Now, things don't last forever, and notice, see this dark, thicker line here? This is the prior day's low right here. And you see how it got broken? This is a 1 hour chart. It got broken here and rallied back up to what used to be support in this general band in here. And we can look at it as resistance. Well, the thing is that a pattern to sell set up right here. Okay? So, when you start making lower lows, there's generally a good shorting opportunity, if it sets up, that is. But it's also important you keep the bigger picture in mind and know where price is likely going to react if it does start to go down, so that you have an idea where to take your profit. Here's what happens. We have this prior day's low broken. We have a pattern number 6 setting up. We have a support resistance level that was hit here, which coincided with a Fibonacci level. We had the M2 daily pivot, which is right here at 94.34, and the necessary qualifications were met for a pattern number 6, and it was a 30-minute MOF. It means money on the floor. That we teach slingshots and MOFs in the coach's corner, and I'll tell you, they're an excellent way to qualify these trades. So let me show you on a 15-minute chart here what happened. The sell was at 94.34 area up in here. It was a 10 pip stop on it, and the target, like as it was going down here, there's lots of reasons to expect a reaction around the figure level right down in here. First of all, we've got the S1 daily pivot at 94.04 in here, and of course the figure is always a place to keep an eye on. That alone was good for 30 pips, that little drop. On a 10 pip risk, that's 3 to 1. That's a very, very good return on your account in like not a very long period of time. Actually, there was a second entry as price went down. It came back up, hit this resistance, another Fibonacci level, prior day's low area, another move down, really good. And this one here hit its targets absolutely perfectly on the way down. Now, remember this though. This is a pair that's in an uptrend. So be attentive to levels that should offer up a good trade to the long side. Now, I'm also going to say that it is Friday. Things can tend to get a bit quieter later on. I'm just showing you this as an illustration of how well these patterns can work. Because what happened if, back on the 1 hour chart here, I just want to, we watch all these levels down here and these big fractal low points in here. And what happened is we now had a pattern number 1 setting up right here. That's our pattern number 1. And that's found by observing the different Fibonacci retracement levels on these higher time frame charts. Now, I like to keep these videos short, but I can tell you this. Not only was this pattern number 1, but if you look at the 4 hour chart, which I'll show you right here. If you look at the 4 hour chart here, you can see that this 93.80 right here was an expected level of support. It used to be resistance, and it came down to it, and it's an expected level of support now, isn't it? We don't know if it's going to be. But the thing is, it was also an 8 hour slingshot trade. So we have, what do we have? We have our pattern number 1. We have support resistance. We have, if we go back to the 1 hour chart, I want to show you this here. Here it is right here. We have the M1 daily pivot, and we have an 8 hour slingshot. That's a lot of stuff. The point is, a lot of confluence was happening right at that level of expected support. That trade popped up, and where did it go? It went and hit the prior day's low right here. It's an expected level of resistance, isn't it? Look what's happened since then. That's over 40 pips worth right there. Well over 40 pips. See? So understanding all of this price action is really important. So I just wanted you to see how powerful the patterns are that we teach. And when you get a confluence of factors all happening at one price level, you just simply have a very high odds trade. And not only that, an incredibly good reward to risk potential. And just quickly, I had a question from a Coach's Corner member, and I know other people have wondered about this. And he asked if these big radical moves like we had on Wednesday, you know, we had the FOMC rate announcement. And he asked if, you know, whether or not these big moves affect the patterns. Like, are they still going to work? And the short answer is no, they won't affect them at all. In fact, the volatility can actually be quite helpful as long as the pattern is proper, it's recognized properly. Just a quick example, if we look at this US yen pair following the rate announcement, this is the big drop. Okay. So as price was making its way down here, this several hours after this happened, I'm going to show you on a 15-minute chart here. What it did was, it was over here, right here. See how it was swinging down and up and down and up and down like this? It set up pattern number 4 for a buy. And Shirley Hudson actually had this trade. And if you look at the 4-hour chart, let's go to the 4-hour chart for 1 second here. Looking at the 4-hour chart, and here was the buy level down here. If you look left, is it reasonable to expect that this could be a level of reaction? I mean, it was resistance here, it was resistance right there. Sometimes it went right through it, but you can't just say that there was a trade there. You have to go and look and see if there was any pattern setting up. And here it was again, right here. See? And so around this 98, just below this 9800 level, we could expect something. And also it's the monthly central pivot. It's just another thing to note. I wouldn't trade just because of that. But it's the fact that a pattern set up down there that was the reason for trading, because you know, just because we hit a support resistance level doesn't mean you want to trade there necessarily. So she got in at 97.88, and what happened on that trade, which is very close to the low here, by the way, it was a great entry, but it was, like I say, it was just because of the pattern. And she scaled out on the way up, and she ended up with a reward to risk of over 4 to 1 on that trade. Just imagine that. And there was lots of other trades that same day too, in addition to that. So I just wanted to make the point that no, these big moves don't ruin the patterns. They still work. There have been lots of trades since the announcement, good trade setups. They just continue to do so every day. And by the way, you know, we go over all of these trades in great detail in the Recurring Forex Patterns daily trade review service that Shirley and I do. And it's very inexpensive, so it just might be something you might want to take a look at. Anyway, I hope those examples and comments were helpful for all of you. If you're still struggling with all of this, well, something's got to change, right? So let us know if we can help. And in the meantime, you guys have a great weekend, and good luck in the week ahead. All the best, and let me know if you have any questions. Thanks so much.